Silver is sitting at $22 per ounce. Will we ever see prices like $40 or $50 per ounce again? Today, we have a special guest, Chris Marcus from Arcadia Economics. He's been following silver for years. He's a respected voice within the silver community. Chris, welcome to Ron's Basement.
Hi, Ron. It's a pleasure to be here. Always fun talking with you, and been nice getting to know you the last couple of years. And obviously, plenty to talk about in the silver world. So happy to be here with you today and dig into it.
Let's dig into it. Well, my first question, because you were a person who taught me a lot about silver years ago, would you ever think that this dollar fantasy or the market would be able to remain in the current state that it's in for as long as it has?
Well, certainly when I got into this, which was 2009, now that was before the run up in 2011, which obviously for anyone who was following it back then, I think certainly has an impact and has opened our eyes into what is possible given some of the types of events that can play out. Obviously, I don't think many people, if you had gone back 20 years, would have expected QE2, 3, 4, and the way some of these programs have been used. And when I left the trading floor in 2012, about a year after we had hit the $50 silver price and saw where things were headed from a monetary perspective, yeah, I very much agree. I don't think I would have believed that we'd be sitting there 10, 12 years later and here's silver. And Ron, I might note we're not at 22 bucks anymore. We're at 22 and a half. So
Okay.
a little bit better. And so there's on one hand where seems a little difficult to imagine that things would go on like they have. Yet, as I've thought about it more and reflected in these past couple of years, I think there's also a degree in which it's wise to realize that things can go on for a lot longer. Obviously, there's some things happening this year where a lot of us are keeping an eye on the draining of the reverse repo facility, the expiration of the bank term funding program, and wondering exactly how that's going to play out at the same time where you have the Treasury going wild. And now some legitimate concerns of how do we actually fund this gap that continues to exist. But with all that said, I mean, we saw last year a great data point of, all right, the banks got in trouble. What happened? The Fed did launch a new facility. The government is spending more money. And we may not agree with that. We may not like that. Although when I think about, if there are liquidity issues or credit event at some point this year, you do expect that they're going to do something similar, that there will be another round of the same thing. And, on one hand, I get it where I may disagree with the idea of using currency creation to paper these things over and just push it down the road. On the other hand, if someone in the Fed or the government is making the decisions, what are you expecting them to do? They're going to keep propping it up to avoid any sort of more severe calamity that I think when we look at some of these trends, think at some point is coming and there's going to be a day of reckoning. Yet when you think about the mindset of the people who have the decision-making power over how these things play out, yeah, you have to expect that they're going to continue to prop this thing up as long as is possible. In fact, if you think back, what we're on recording February 6th today, I think, especially in the gold and silver community, if you think back just about a year ago when Signature Bank, Silicon Valley Bank, First Republic, when they were failing and there were bank runs, probably if you had told most people that the rest of 2023 would play out like it did, where things calmed down, the BTFP patched things over, and you didn't have any further issues, especially with concerns about commercial real estate and other areas in people's minds, it might have been hard to imagine that things would calm down like they did for almost a year now. So I don't think that means that the situation is patched up and from a long-term perspective, it's Miller time just yet, but certainly something to keep in mind especially when you're setting your expectations and looking at metals and what role that you're expecting them to play, that we have seen this template, and there is an ability to keep things at least appearing the way they are longer than we would expect. So balancing that with how people see the bigger situation playing out, I think goes a long way, and can help a lot in the process that we're going through.
Fortuna Silver Mines is a global intermediate gold and silver producer. Since 2005, Fortuna's best-in-class management has delivered impressive growth and profits. Fortuna's solid financial position and operational expertise allows for performance in any precious metals price cycle and provides a foundation from which to harvest great profits in more favorable metals markets. Investing in Fortuna is an investment in quality, long-term, sustainable production of in-demand precious and base metals. They seem to come up with more and more new and creative ways to bail out the economy. I mean, the BTFP program was a bailout, a rescue program. I found it interesting. Just recently, Jerome Powell was on 60 Minutes, and he directly addressed the fact that the debt situation, the deficit situation in the United States is a real problem and is something that needs to be addressed. And I think he even said like sooner as opposed to later. What do you make of those comments?
Yeah, it was interesting when he's been asked about that. Talked about it in a couple of his Fed press conferences after their meetings in the last year or so. And he said that the debt is not so much a problem. It's the trajectory of the debt that he feels is a bigger issue, which I don't know. I would say they're they both seem to be issues in my opinion. Yet in either case, well, that's fine, except that the trajectory of the debt is going in the same direction as the debt itself. It's not like Ron Paul is the leading candidate in the presidential election coming up, and we've not seen anything to indicate that the trajectory of the debt is going to change, except that it's going faster than ever. It's being loaded up, and especially in an election year, I don't know if it's a wise bet to assume that we're going to see much deficit reduction. We had the debt ceiling come up last year, and like just about every previous occurrence, this time it was just removed for a year and a half. So yeah, that's a bit of a problem. We've seen historically, eventually empires get too big, they start spending more than they can, and eventually that does come to an end. And you're hearing the Fed acknowledge it. The Congressional Budget Office, they warn of the heightened risk of a financial crisis as debt to GDP continues to grow. I mean, some of the numbers in their forecast that they have in 10 years by 2050, I mean, it gets disturbing. And again, this is a government agency telling you the same thing. So I think people are, when you ask them the direct question, even in some of these offices, I mean, we even hear some politicians talk about how they realize this isn't a good trend. What to do about it becomes a trickier situation because, yeah, we're getting great GDP numbers that are coming out, but what would those GDP numbers look like if you didn't have such large government spending? So
Yeah.
even if you did cut government spending at this point, you're going to see a massive drop in tax receipts, which just exacerbates the deficits further. I don't think that there is an easy, perfect solution out of it. And that's the problem. And I think that's what leads a lot of us into looking at gold and silver, where you see where it's headed. That part isn't complex. And now you see, like you point out, Fed, other groups are mentioning that there's an issue here, which only goes one way. And when that becomes a more significant event, I mean, it seems to me that it's an inevitability that we're going to have a situation similar to what we saw in the housing bubble. I mean, we had one problem that was just resolved with even faster money printing, faster debt. So it hasn't gone away. And going back to your first question of, well, how long does this go on for? How do you balance that? That's the part that we sit there and watch and keep an eye on. I don't think anybody knows the answer. I go ahead.
Yeah, well, and we don't want to be doomsayers, right? Sometimes we get accused of, being doom and gloom sayers. I heard someone recently say, "I'm not a doomsayer, I'm a risk assessor." And I think when we look at the mathematical facts as they're presented to us, it sure feels like we aren't headed in a real good direction. And I would just throw out that, if you look, let's say from 1970, around the year that I was born, through today, about 50 years, we know that the dollar has lost 98% of its value against gold. And the fiscal and monetary situation during most of that 50-year period uh, would probably be, I wouldn't say healthy, but much healthier than what we're going to face in the next 50 years. So, I think when we look at the facts, it becomes pretty obvious that we're headed for some interesting times. And I watched there was a documentary, I think, on Netflix about Bernie Madoff a few months back, and I was engrossed in it. It was like 2 hours long, but I was just amazed at how he was able to keep that situation going for so long until finally it blew up. And again, I don't want to be a tinfoil hat, the sky is falling type person, but I just wonder to a certain degree if what we're living through, like you talked about, right? The reverse repo program, the BTFP program, QE. I mean, they keep coming up with newer ways to kind of perpetuate the system because they're all beholden to it. But at some point, do things start to fall apart?
I know what you mean, and especially what you mentioned about the mindset, whether it's a doom and gloom crowd. Yeah, I mean, I think there's an element of that mixed in there because there are things that are taking place that aren't particularly good.
Yeah.
So certainly that can make for an interesting psychological challenge where, once people get invested in gold and silver, there's that part of you that wants to see your investment decision pay off. And you look at the things that have traditionally moved the gold and silver prices. And on one hand, they're not good things for society to see
Mm-hmm.
the prices have gone up in the past couple of years here in the US and around the globe. It's not something you want to see the way debt loads have gone up, to see the way things are patched over with more printed money. These aren't good things, and it can be tough sometimes. Where, especially if you read Zero Hedge and a lot of the news that's coming out, you see the types of trends that would support the thesis behind gold and silver, and it can be tricky to stay balanced of thinking, all right, I have an investment that can perform well when these things do unfold, yet not wanting them to unfold. And everyone has their different spectrum where they are in that line. And so it can be hard to read through some of these news events and see the things that are happening without falling into that doom and gloom mindset. Like you said, though, I mean, we're risk assessors, and again, it reminds me of a very similar environment that you saw leading up to the housing bubble, where there were people warning about it. Most of them were talking about the Fed and gold and silver and printed money and how these credit cycles work out. Most people who are in the housing market didn't want to hear about it. In hindsight, I think a lot of people would have wanted to have that warning beforehand and look at some of these things. Is it easier when you're seeing bubbles inflated? I mean, right now we're seeing stock markets hit new highs, and so perhaps it's more fun to talk about that. I think it's good to look at all of these things and then balance them together and find out where you stand.
Yeah.
But certainly, yeah, it can be tricky because there is a lot of heavy news that comes out. We're seeing new conflicts go on in the world. We're seeing a lot of money being spent for weapons and to fight new wars, which is going straight onto the balance sheet of the Treasury. So it's understandable that it can be a doom and gloom thing. I think balancing that is a big part of being invested in these things, and why perhaps looking at gold and silver as insurance more than a speculation might be a healthier way for many people to approach it, so that you can see what's going on, feel prepared, not end up. I know there's that temptation to go where, yeah, the bricks are gonna kick our asses tomorrow and gold's gonna take over, which you could see a big appreciation in the gold price in a scenario like that. But again, what does that mean for the way that we're living day to day? So
Yeah.
certainly something that I think is a challenge for a lot of people who get into this, balancing the emotions of that and getting to a place where you can feel prepared for the things that you see that are out there, not having it take you to a little bit of a darker emotional place, and just balance these all together so you can continue living your life and have the investments serve you, rather than necessarily getting yourself beaten up by some of the heaviness of a lot of the things that are going on.
If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
Have you ever heard this notion, Chris, that some people say the price of silver is manipulated? Have you ever heard that once or twice over the years?
I've heard it once or twice. I've talked about it more than once or twice, and yes, it's certainly a unusual
Well,
pricing system we have.
so I have a question for you. I want to get your take on this. It dawned on me the other day. Currently, as you pointed out earlier, we're sitting at about $22.50 silver right now. If the market were functioning properly and the market were really determining the price at $22.50, wouldn't supply and demand for silver on an aggregate be about equal? And I guess the point I'm trying to make is the fact that we have, according to the Silver Institute and a number of other people that are studying the supply and demand numbers in silver, we have a big deficit in the silver market. Wouldn't that just quite simply on its own indicate that the real market price of silver should be higher?
I would think so, and perhaps it's similar to what we've seen in the uranium space, where for years Rick Rule was out there talking about how either the price of uranium is going up or we're going to stop using electricity. And it was a tough wait for a lot of people who were invested in the uranium space. And then eventually
Yeah.
it did go up to resolve that imbalance. Similar with silver now, you have the deficit that you mentioned. We've seen declines in the COMEX inventories in the LBMA silver holdings, which you and I talked a little bit before over the last week before we recorded, and seeing those declines at the same time that we are seeing the deficits.
Yeah.
And even though it's interesting, COMEX and LBMA have kind of stabilized for over a year now. We saw that significant decline that began back in 2021, right around the same time as the silver squeeze, and LBMA and COMEX inventory levels were falling pretty sharply for about a year and a half, until, let's call it, I believe, around November-ish of 2022. So we've seen those levels stay flat for about a year. Now, what's interesting is that as we ran another deficit last year, we've seen the ETF holdings go down. So a lot of SLV and some of these other funds, and I've wondered if that's how the deficit has been funded over the past year. So we can have deficits, as we've seen, can see the price stay the same. Although when you look at, all right, well, how does this get resolved? What are the pieces that you want to look at moving forward? Now we have an environment where, as I know a lot of your listeners are familiar that are invested in the mining stocks, you've had what I've had many people describe who have been doing this for decades, worst sentiment they've seen with the miners. For any of your primary miners, a lot of them, this is close, the price is close to their all-in costs. So it's not as if we're in an environment where, all right, we're running a deficit, but people are out there milling the heck out of silver and finding new deposits and bringing them to surface. So that, I think, is going to be a big issue at some point, because if we're running a deficit now, you're not getting the new investment to go in there. That's a problem. And especially when you think about how long it takes between getting something permitted, going out and drilling, and then bring it to production. If you do have a shortfall of silver, there's not a switch that you can flip on and next year, all right, here's a big new supply of silver that's coming onto the market. So a lot of these things take longer than it might be ideal. I mean, are we living under the efficient market hypothesis where everything gets factored in by everyone perfectly at the same time? No, it doesn't work like that, especially when a lot of the pricing is driven by investment speculation and what the Fed is doing. And you can have these periods, and we're not seeing it just in silver. There's other commodities that the supply and demand dynamics aren't lining up, let alone if someone is expecting that we're going to hit any of these green mandates. You don't have the mining supply there to do so, and it's not a quick process that happens overnight. So I think that's where ultimately we see the price forced to react to that. Does it lead us to a situation where there is a shortage of silver available to meet industrial demand, let alone if we have a monetary event that really spikes investment demand higher as well? It certainly seems to me like we're on track to have that. When that plays out, again, we'll see. And people want to keep watching what's going on in Ron's basement, of course, but that's where it's lining up right now, and we'll see how it unfolds.
Yeah, you're getting me excited, because I'm looking at the facts again, right? That in a properly functioning, healthy market, when demand is greater than supply, the price goes up to fix that, which encourages more people to invest into things like silver. That has not been happening. I guess the theory would be that the deficit has been plugged temporarily by what had been some excess above ground inventories. But at some point, the market will prevail, in theory, if demand does indeed continue to outstrip supply. And like you said, we do know that supply coming from the mining companies, for a number of factors, has been going down. So we could have a point at which there are no more or a limited amount of above ground inventories to satisfy that deficit. And at that point, possibly, we could see higher silver prices. Now, on top of that, and I want to get your opinion on this, Chris, and I think you touched on this, investment demand for silver fluctuates. And that's, I've heard some people say that's kind of like the marginal demand number. And that's what can, to a certain degree, really move the price. So if we work off this theory that, let's say, in the West, in the United States, maybe, I like to say, maybe 1 in 200 people invest in physical silver, if we focus in on silver, that if there's a big uptick, maybe because of financial issues, whatever the case may be, in investor demand for silver, and that number goes to 2 in 200 or 4 in 200, you start to look at multiple amounts of money coming into the silver sector. Maybe what happened a little less than a year ago with the banking crisis in 2023 is a good example of what can happen, where it's, I would go to my local coin shop and there was no silver, and they were, saying, hey, you need to wait 6 weeks or 8 weeks, whatever the case may be. On top of that, so you have that prospect of increased investor demand, but on top of that, also, we also know that as the price of silver goes up, silver investors, and I'll include myself, tend to buy more as the price goes up. That we could have like I don't want to say a perfect storm, but I'm trying to be optimistic here, that we could get into a period of time where the demand for silver becomes quite robust, and a point at which the market can't supply the silver that's needed.
Yeah, absolutely. I think that makes a lot of sense. And one of the things that draws people to silver, sometimes in some cases more so than gold, where you have a very small market that
Yeah.
if you see a lot of interest come in, which we've had glimpses of at various points in the past couple of years, although they've died out somewhat quickly. Yet, if you see money come in, I mean, it's a billion ounce market at $23. That's
Yeah.
silver supply 23 billion or so. I mean, that's relative to the size of a lot of other markets is a small market. Certainly, people who get into the mining stocks, especially some of the silver juniors and explorers, if you have any significant amounts of money come into these spaces, that's going to have to push things up.
Mm-hmm.
So I've wondered what things will look like when you see silver over $30. Again, we live in a world where there's a lot of investing on momentum and people wait until things start moving up to pile in. And certainly that creates an environment where with a rising silver price, if you do see, I would say even when you do see that investment come in, that necessarily has to push things up in a bit of a substantial way. And it can be tough to wait, tough to sit on. Yet when you have a credit event, we again looking back to what happened last year. I mean, there was a stunning surge in retail physical silver investment. A lot of shops are running out of product, and that's something that we've also seen several times over the past couple of years during silver squeeze, a couple times in between then when it's a bit of a bipolar environment in which it works, where for the last couple of months things have been really on the slower side, but when things heat up, things quickly go unavailable. So that certainly has been the history of silver, especially in these past couple of years. And I would expect that we'll get that again, because if you have the industrial demand continuing to grow, which all of the reports and data that we've seen have suggested that's the case and is forecast to happen again in 2024, then if you have a ongoing surge in investment demand, certainly that throws a variable into the equation, similar to what we saw last year, where there was a big spike. If that doesn't come down quickly, yes, that's when you could see the potential for a gap between that supply and demand to really exacerbate things. And I think when you have that happen, there's going to be a day where you can see things move pretty quickly, and I think will be worth the wait for people who are investing in the silver space, even aside from some of the bigger monetary implications. Like you said, just the small size of it and fitting money into that is going to have an impact.
Yeah, I like to point out, I always check on Yahoo Finance every morning, and at the top of the page they have the tickers, the NASDAQ, the S&P, and the Russell 2000, and then they have gold, and then they have silver, and it just boggles my mind. I think how if silver's not that important, why it's a 20, like you said, $23 trillion worth of silver is mined every year. And when you compare
Billion,
that to
not trillion.
billion, I'm sorry, billion, and you compare that though to the trillions that that the market caps of companies like Home Depot even, or just, I mean, it's a very small market that I guess I forget who says it, but that if money starts to come in, it's like trying to drain Hoover Dam with a garden hose. I forget who said that, but it to me that makes sense.
Yeah, and I think that's one of the things that really catches the eye of a lot of people who get into silver, perhaps draws them in some cases away from gold, where most of the gold is still out there, versus silver, so much of it being consumed by industry. So not much left over for that monetary component. And it'll be an interesting dynamic. Well, we haven't seen central banks buying any silver yet. Certainly that would be quite a game changer if that did take place, although strong demand of silver from China. We've seen India slow down, but there's a lot of places, especially in the Far East, where we're seeing a lot of demand for silver. And at some point, you reach that break point where it's just not there. And if you don't have money going into increasing the supply, we don't know the timing on how all of that shakes out, but you can see where it's headed in advance, similar to the same way I think a lot of people who were looking in the right places saw what was going to happen to the housing market in advance. It's just tough in a world where investment horizons often very short term, day trading, or a lot of funds or banks marking by the quarter or the year doesn't make it easy if people have that mindset to be looking at something that's more long term before you see that payout. But you can see the pieces and certain things that are going to have to evolve and follow through whenever that day and time comes.
Yeah. Yep. And we could talk about the BRICS for hours in this. We are seeing a shift, a slow, gradual shift, though, towards new markets for the metals being developed as well. The Shanghai Gold Exchange, for instance, where I keep hearing that an ounce of silver on the Shanghai Gold Exchange sells for sometimes $2, sometimes $3 more than what they're selling for on the COMEX.
Yeah, we've seen those increased spreads. The gold spread got pretty wide. I believe it was back in early September. Silver premiums have remained elevated. And, there's going to be some degree to which we see some of these things are. We've seen a lot of gold go over to China in these past couple months. And I believe there's a lot of silver going over there as well. And you see the way that countries are speaking about this situation. They talk. You see Putin say the same thing that gold and silver investors are. They don't like the way the dollar is used as a weapon. They don't like how borrowing is just papered over with more printed dollars. And that's a big change that we've seen in these last couple of years, because 10, 20 years ago, it was one thing to say, all right, countries don't like how the U.S. is bullying people around and using the dollar as the financing mechanism. Now they're standing up in ways that a decade or two ago would have been unimaginable to believe. And it's not just some smaller countries that are more easily pushed around, but large nations with large resource bases that are actively moving away. And this is let alone the possibility that don't think we know how it's going to play out yet, but we've heard the White House talk about taking the $300 billion that was frozen of Russian assets and now considering taking it and just sending it to Ukraine. And if foreign countries were a little concerned about the safety of reserves that could be frozen at any point, they were already concerned about that. Should that go through? I've read some interesting research papers in the last couple of weeks of imagining how Putin might respond to that. Obviously, you would imagine he's not going to be particularly thrilled. And same time, when they've been studying, we don't know what the ultimate outcome, but certainly we've seen enough out of Russia. They had that temporary soft peg to gold shortly after the invasion. Sergei Glaziev has been one of the top lieutenants in Russia, has been studying ways to move and transition towards this system. There's a lot of speculation maybe something would happen at last year's BRICS meeting, which didn't happen overtly yet. I don't get the feeling that it's been dropped behind the scenes, and we see enough coming out. And you can also look at the reasons why countries are responding like this. So another dynamic added on that leaves you feeling a little less than ideally safe in some of the current traditional legacy assets like the dollar and the U.S. Treasury.
Yeah. Well, Chris, thank you. This has been great. I think we looked at some of the base fundamental factors affecting the silver market. We zoomed out and looked at the geopolitical factors, and I think you and I could talk for a lot longer. But on behalf of everyone who's joined us today, I want to say thank you. Like I said at the beginning, you have years of experience. You're a respected voice within the precious metals community. I think we also share a channel sponsor. Fortuna Silver sponsors my channel, also one of your sponsors. We'll say thanks to them for making this video possible. They're an intermediate global gold and silver miner. And if people want to learn more about you, Chris, in Arcadia Economics, how do they do that?
Well, best way is just go to YouTube and find us at Arcadia Economics. We have a show daily. Actually, about to be introducing a new schedule with some different things that I think people will enjoy. Fortunate to have a couple other hosts on there that have different perspectives and talk about the markets from different angles, but certainly with a focus on the metals and our channels at Arcadia Economics. And as you mentioned, it's been nice following your progress along as you built your channel up. And I think it's great that there are people out there talking about these things. I know you're going at this every day and just letting people know about some of the things that aren't covered in many other of the financial media, which I think are important to know. I think it's good to have a balance to a lot of these things, get different sources of information, but certainly appreciate, I enjoy watching your show and appreciate that there's someone like you that's taking a step back and looking at some of these bigger issues and helping people to be prepared for some of the things that are happening and coming. And just nice to catch up with you again today.
Absolutely. And some of my favorite guests that Chris has on Arcadia Economics, Rafi Farber, Dave Kranzler, is it Jim Willie? Is that correct? He's one of my favorites as well.
Him on from time to time. Always plenty to say for Jim.
Yes, and many more. I think Bill Holter. I've seen. I mean, you get some of the top people and some of the most insightful people. So I would encourage all of our viewers right now to go, if you haven't already. Most people know of Arcadia Economics, but if you haven't already, go check out Arcadia. Chris, thank you, and I'll look forward to talking to you soon.
Thanks, Ron. Appreciate it, and we'll look forward to doing this again soon, my friend.